everyone. My name is Steffi. Today my subject is about income tax 2, that is BCom 5th, 6th sem. Before I'm going to start, you have studied already income tax 1 in 5th sem, isn't it? In that you have studied the 5 heads of income tax. 5 heads of income tax. Which are the 5 heads of income tax? One is income from salary, income from house property, income from profits and gains of business and professions, income from capital gain, and last one is income from other source. Isn't it? These 5 heads you have studied already in 5th sem. In 6th sem, I'm going to teach in detail about income from other source. That is the last head of the income. So just I will write the 5 heads of income tax. So 5 heads. 5 heads of income tax. So first one is income from salary. That is the first head. So income from salary. Next one is income from house property. Income from house property. Income from profits and gains. Profits and gains of business and profession. Next, income from capital gain. And last one is income from other source. Income So these are the 5 heads of income tax. This is very, very important while going to higher studies. Okay, these are very, very important. So these are the 5 heads of income tax. That one is income from salary, income from house property, income from profits and gains of business and professions, income from capital gain, and last one is income from other source. Yeah. So now income from other source. This topic I'm going to teach in detail with theory as well as practical. So income from other source, section 56, 59. So just we can go through the meaning about income from other source. Okay. So yeah, meaning is that as per the section 56 subsection 1, any income which is not specifically exempted and not chargeable under any other head of the income and shall be chargeable under the head that is income from other source, and this is the last and residual head of the income. So here tells that so any transactions that cannot be classified under first 4 head. So which are the first 4 head? One is income from salary, income from house property, income from profits and gains of business and professions, income from capital gain. So these 4 heads cannot be classified under this head, and it can be classified that is the last head of the income, that is income from other source. Okay. Yeah. Next, an income chargeable under this head if the following conditions are satisfied. There are 2 points that the condition has been satisfied. So first one is the income must not be an exempted income. Next, the income must not be chargeable under any other head of the income. Though, so these 2 points that are satisfied in following conditions. Okay. Next one is tax treatment. So in first tax treatment, one is dividends. So dividends from domestic company is not taxable if accessee is resident in India and dividend incomes exceeds like rupees more than 10 lakh. The excess amount will be taxable. So if more than 10,000, it will be a taxable. If less than 10,000, it will be a it not be a taxable. For example, the questions gives like dividend from domestic company, that is 12 lakh. If they give 12 lakh, so what is a taxable amount? That is 10 lakh. So 12 lakh minus 10 lakh, remaining how much you will get? 2 lakh. So that will be a taxable. So in amount column you should write 2 lakh. Okay. Next, UTI are not taxable in the hands of the shareholders. Next, net dividend from a foreign company are taxable in the hands of the shareholders. If accessee claims double taxations, relief the gross dividend shall be taxable. Next, last point is deemed dividend from domestic company are taxable. So which domestic company are taxable? That is deemed dividend. Okay. Deemed dividend from domestic company are taxable. Next topic is that interest on securities. So as per section 228B, so interest on security means the interest on any securities or central government or a state government in interest on debenture or other securities issued on behalf of like local authority, a company or corporate established by a central state or a provincial act. So this comes under interest on securities, and the following expenditure are deductible from the interest. One is collection expenditure, next one is interest on loan, next one is any other expenditures. And in interest on securities has divided into two parts. One is less tax securities and next one is tax-free securities. So in less tax securities, that divided into two. One is government and commercial. So in government, that is no need to gross up, and if percentage is given, so no need to gross up. And in commercial, if the amount is given, that is listed and unlisted, so amount received, that is 100 divided by 90. So 100 that is listed and unlisted, the tax rate percentage is 10. So 100 minus 10, you will get 90. So the amount received, that is 100 divided by 90. Okay. Next one is tax-free securities. So tax-free securities has been divided into two. One is government and commercial, that is exempted from tax, and commercial, whether the person is given the amount is given always gross up, that is listed and listed, the amount received, that is 100 divided by 90. So that is listed and listed, the TDS rate will be, percentage will be always 10%. Okay. Yeah. Next one is interest on the following security is fully exempted from tax. So there are so many points that we should go through it while doing a problem. It will be very useful. Which are the exempted list, which are taxable list, everything. Okay. So first one is National Defense Gold Bonds 1990. National Plan Certificates 10 years. National Plan Savings Certificates 12 years National Saving Annuity Certificates, Treasury Savings Deposit Certificates. Next, fixed deposit schemes governed by the Government Savings Certificates Fixed Deposit Rules, that is 1968. Post Office Cash Certificates 5 years. Post Office National Savings Certificates and Post Office Saving Bank account to the extent of rupees 3,500 in case of individuals and 7,000 in case of joint accounts. So this point is very, very important while doing a problem. So in problem, they'll give like what is a post office saving accounts, that is 4,000. So the exempted list is that 3,500. If the questions gives more than 3,500, it will be taxable. How means the post office saving bank account, that is 4,000. And what is it? 3,500 is an exempted thing. So 3,500 minus 4,000, you will get 500. That you should write in amount column. That amount will be a taxable, which that 500 amount will be taxable. Okay, that in case of individual account, and 7,000 in case of joint account. Next one is post office accumulative time deposit amount. Next, public amount in post office up to 5,000. Fixed deposit schemes governed by the post office fixed deposit rule, that is 1968. Deposit made by a retired government employee out of his retirement benefits for the lock in the period of 3 years. Next, special beer bonds, that is 1991. Special deposit schemes, that is 1981. Capital investment bonds, relief bonds, NRI bonds issued by RBI, non-resident rupees deposit schemes, interest on tax-free government securities. Next, last one is interest on gold monetization schemes. So these are the interest on the following following securities is fully exempted from tax. These are the so many lists. In this list, we should go to it properly. So while doing a problem, we can understand which is listed and which is not listed. Okay. And no TDS is made in the following. Which are the TDS? That is, no TDS has been following. One is interest on sales tax government securities, and next one is 1/4% of national defense securities, national development bonds, 8th issue of national savings certificates, 6/1 divided by 2% gold bonds, 1977, or 7% gold bonds, 1980. Interest paid to an individual account, pay checks on for an amount not exceeding rupees 5,000. Next, interest on foreign government security is not grossed up, has no tax, is deducted at source in Indian such other income. Post office monthly income accounts, post office time deposit, post office recurring deposit. So these are the things that is, there is no TDS made in the following part. Okay, next topic is that bank interest on fixed deposit. So which are they? So it is fully taxable, which is bank interest on fixed deposit will be fully taxable. Next, the bank or cooperative society or post office, it should be deduct TDS if the following conditions are satisfied, like they should be a fixed deposit. Then the interest should be creditable annually, and the interest if exceed more than 10,000, if the net interest is given in the problem, it shall be grossed up. The formula is that gross interest, the formula is that net interest into 100 minus tax rate. Okay, so note the point, that is for tax rates refers the TDS table. So the TDS table I have given separately in last. So which are the TDS percentage? Okay, that is very, very important. So I make a separate slide for TDS rates. So here, if the question gives that net, if the question gives like separately net, so you should calculate TDS. Okay. So you should calculate TDS, and how to calculate the formula. Therefore, like 10, the formula is that net and interest into 100 and 100 minus tax rate. So if questions gives like 10,000 net interest, okay, so 10,000. Just I will see how I will tell how to calculate. So net interest into 100 divided by 100 minus tax rate. So tax rate percentage is 30. So 100 minus 30, you will get 70. Okay, so 70. So the answer you will get, so 10,000 into 100 divided by 70, you will get 14,285. 14,285. 85. So this only how we have to calculate the TDS part. If they give that problem like net interest, if they mention net, then you should calculate TDS. Okay. And the last point is that TDS rate. Based on TDS rate, we will calculate. Okay. So these are the things you should be noted. Next one is casual income. So casual income is a non-recurring income that is not likely to occur again in a year. It is an income which is extended by chance. Such income is neither anticipated nor provided for in any agreement. So such incomes are received uncertain times. One is winning from lottery, crossword puzzles, TV game shows, tax at source is deducted. If such winning exceeds more than 10,000, however, in case of winning from horse race, in case of winning from other race, gambling, betting, cards, etc. So this is not deduct at source. Okay. Next one, in case of winning from other race, gambling, betting, cards, etc. So tax is deducted at source. These are the things you should be noted. And the casual income part is very, very important. And the casual income, that TDS rate is 30%. That also it's very, very important parts. Yeah. Next one is income from family pension. So family pension paid has a regular monthly income, uncomputed pensions by the employer to a family members of an employee in the event of his or her death. Family pension is taxable after allowing exemptions of 33.33%. That is 1 divided by 3, you will get 33.33% of a family pension, and the maximum limit is 15,000, and in whichever is less. So maximum limit they has given 15,000. If you write 14,000 while doing a problem, the answer will be completely wrong. So there is a certain fixed amount, that is 15,000. You should not write like 14,000 or 16,000. It will be wrong. The fixed amount is that 15,000. And for family pension, there is a format. Okay. So what is the format? So you should write particular and 2 amount column. So one is actual family pension receipt. In question, they use that actual family pension receipt. That question, based on that amount, you should write. And less list of the following. In list of the following, first sub point is 1 divided by 3 of actual family pension receipt. So in question, they use that actual family pension receipt 20,000. So you will write in amount column, that is actual family pension 20,000. And next point is that list of the following, that is 1 by 3. So 1 by 3 of actual family pension received. 1 by 3 into 20,000. How much you will write? That you will write in amount column. And next one is maximum limit is 15,000. So that you see whichever is less, you should not minus. Okay, that is actual family pension received and maximum limit. In that whichever is less, that you should write in right column amount. And less after that, actual family pension received and the list of the following. Okay, that too you should minus, and you write the answer last. It will get taxable family pension. So this is the format for family pension. While doing a problem, you will get to know how to do it. So this is very, very important part. Next one is rental income from machinery, plant or furniture. So rental income derived from lending out of machinery, plant or furniture without building is to be computed after making in the following deductions. So one is the amount incurred by accessee on the account of current repairs of the assets hired out. The amount of insurance premium paid by accessee against damage to the assets of hire house. So these are the things that the income from machinery, plants or furnitures. Okay. Next part is very, very important. That is income from subletting. So first one is rental income from subletting portion is a house shall be assumed in the has income from other source. So rental home, it should be considered as income from other source. So there is a format. Okay, so taxable amount is, first one is rental from subletting portion. Okay, less rent, less municipal tax, repairs, and later whichever is minus, that will come as taxable income from subletting parts. Okay, so while doing a problem, this also we will get. One is family pension part and next one is subletting part. Yeah, next one is insurance commissions. If resident individual receives insurance commission in the previous year, such commission is taxable under the head from other source. Further, if the amount of such commission is more than 20,000, so tax is deducted at source. If the net insurance commission is given up, so if the question gives that net, so you should calculate the TDS part. So the format is that net amount into 100 minus tax rate. Okay, so how you will calculate? So net amount you give like 25,000. Okay, so 25,000 into 100, and for insurance commission TDS rate is 5%. So 100 minus 5, you will get 95. So just you see what is that, 25,000 into 100. Okay, divided by what? Divided by 100 minus 5. So you will get 95. So you will get 26,315. You will get answer last. You will get answer, that is 26,315. The last amount, the commission amount you will get. What is it? 26,315. That like that you should calculate while doing a problem. If the questions give like net, so you should calculate TDS, and if the questions if more than 20,000, then you should do a TDS part. Okay, next, deemed incomes are not, so deemed incomes are not income, but as per the Income Tax Act, they are regarded as income and included in the tax income from other source. The following consider to a deemed income, that is cash credit, unexplained expenditure, unexplained investment, unexplained money, etc. This comes under in deemed incomes. And this is very, very important while doing a problem. So the rate of TDS, you should know the rate of TDS. Without knowing the TDS rate, we can't move, we can't do a problem. So just we can go through it. So incomes and percentage. So interest on security issued by a statutory bodies or local authorities, that is 10%, and listed securities, that is 10%, unlisted securities 10%, bank interest 10%, casual income 30%, insurance commission 5%, commissions on sale of lottery tickets 5%, rent of plant and machinery 2%, rent of land, building, furniture, fictitious, that is 10%. This is a TDS rate. Okay. Next one is list of income from other source. Which are the list? Let's go through it. One is dividend income, one-time income, interest from securities, income from machinery, plant or furnitures, rental income, sum of money or property received by an individual, any compensations from employer, any advance received. So these are the income from other source. Okay. Next one is very, very important points that we should be noted. Okay, see so first point is that winning from Karnataka state lotteries, that is rupees 50,000, in bracket they have mentioned gross. If they give a gross, that winning from Karnataka state lottery gross, so you should write in amount column directly 50,000. You should not do a TDS. You should not calculate TDS one if they give gross. Okay. Next one is winning from Karnataka state lotteries, rupees 50,000 net. So in bracket, they have mentioned net. So if they give net, then you should calculate TDS part. Okay. So how to calculate TDS part? Yeah. So how to do calculate TDS part? So the question says that winning from Karnataka state lotteries rupees 50,000 in bracket net, isn't it? So you should calculate TDS. So the question is that amount is 50,000. Okay. So 50,000 into 100 divided by 100 minus 30%. That is TDS, that casual income, that is percentages, TDS percentage is 30. So 100 minus 30, you will get 70. 70. So the final amount is how much? 50,000 into 100 divided by 70. You will get 71,428. 71,428. So this like this we should calculate TDS part. Okay. Yes. So this is clear. And next point is that tax-free commercial securities. The in bracket it has given listed. So I told the listed TDS percentage is 10. Okay. So for example, how I should calculate? See, 20,000. Okay. Yeah, 20,000 into 100 divided by the listed percentage is 10%. So 100 minus 10, you will get 90. So the amount is that 20,000 into 100 divided by 90. So the amount is 22,222. 22,222. So like this, we should calculate TDS. It's very easy, right? Yes. And next point is that rupees 2 lakh and minus 10% debenture of a public limited company is not listed. So not listed TDS format is, what is it, the TDS format? So the TDS format is 10%, percentage is 10%, right? So 100 minus 10, you will get 90. So the question tells that 2 lakh, that is 2 lakh minus 10%. You should do 2 lakh, okay, into 10%. How much you will get? 20,000. So first step is over. So 20,000. And next of a public company, public limited company that is not listed. So how the format is that net interest into 100 divided by 100 minus tax rate, isn't it? So here into 100 divided by 90. Okay, 90. So how much you will get the answer? 20,000 into 100 divided by 90, you will get 22,022. This is the answer you will get. Okay. Next, fifth point is that family pension format that you have studied already. Family pension format, isn't it? So one is family pension received. Next one is list of the following. In list of the following, one is 1/3 of actual family pension. Next one is maximum limit is 15,000. Then you will get the taxable family pension. Okay, that is the format you should note it. Okay, that is very, very important. In that you should notate the maximum limit is 15,000. That is permanent amount. Okay, next you should see 1/3. Okay, that 2 points you should be go through, you should be noted. Next one is subletting calculations that you have studied the before slides. Okay, that you should be know. And next one is bank interest, that is the interest exceed rupees 10,000, then you should calculate TDS part. Okay, so that also it's very, very important one. And next one is, as per the existing norms of tax deduct at source, or TDS bank and post office allowed 10% deduction if the interest earned from savings account exceeds rupees 10,000 in a single financial year. So this, however, does not provide any relief to the depositor in terms of tax on income from interest. That is, if the questions gives that firms, so you should remain the 5,000 in any case if the question, if the mention firms. Okay, next, royalty amount received, deduct all expenses, taxable amount, collection changes should be deducted. And from here the theory parts has been completed. Next sections I'm going to take full of practicals, so the theory part is completed.